All right, greetings everyone. Welcome to market commentary. As you already know, in market commentary, what I do is I do a quick review or a quick overview of some of the trades I took during the week and the context or the rationale behind them. So I believe by doing that, you'll be able to, or by going through the video, you'll be able to learn one or two or be able to pick up one or two that are missing, right? Maybe you'll be able to now know, okay, what are the things that you are doing that you aren't getting it, or what are the things that have been missing on your own approach of trading the financial market. So there are various approach for trading the financial market, but I trade the SLK and the advanced market structure, what we call the algo, right? But mostly for simplicity, I like to stick with SLK, right? So that is structure, liquidity, and the key level, right? So now, first off, first off, so in this commentary, I'll be treating just two assets. So I'll be starting with good, right? And German 30. So because these are, and if I have time, I will also look at GPP, JPY because these are the trade that I traded most during the week, right? So but I'll be starting with good first. So this is 3 a.m. 3 a.m. here. So if I finish with gold on time, then I'll go to German 30. But if I didn't finish on time, then that means I will not review German 30 because I still have some other things I need to do before I go to bed this morning. So let's get started with good. So first off, I would like to start with just a quick overview of market structure, right? Before we come to see what happened on gold during the week using structure and liquidity and key level, which we call the SLK. So in terms of market structure, there are three types of market structure. So we have the bullish market structure where you are going to have the higher highs and higher lows, right? This is the bullish market structure. Then we have the bearish market structure where you are going to have the series of higher lows and lower highs, right? But me, I like to call them tops and bottom. I like to call them tops and bottom, right? Now we also have the ranging markets, right? But personally, I like to start off ranging markets, or if I want to trade ranging market, I trade it with caution, right? So, but for the sake of what I want to cover, I will not be explaining ranging market, even though for the inner cycle guys, I've already explained how you can trade the ranging markets in the market structure class I've had with you. Now, this is the bullish market profile, what we call the uptrend. This is the bearish market profile, what we call the downtrend. Now, for the bullish market profile, what constitute them, right? What makes the profile? What constitute them are the bottoms. I like to call it bottom. People call it higher or low, whatever, but I like to call my own tops and bottom, right? So these are the bottoms. Why these are the tops? So what constitute the profiles are the bottoms. So that means as long as the bottoms are higher than each other, right, the profile is bullish. Then for the bearish profile, what constitutes it are the tops, right? So as long as the tops are lower than each other, the profile is bearish. Now, there is not going to be a market structure shift. So there are various names people call it, right? But it's not all about the name. It's you understanding what the market is in. Some person will call it market structure shift. Some person will call it change of character or church, and some persons will call it BMS. So it still means the same thing, right? But what I'm trying to say, as long as these bottoms are higher than each other, right? Price is bullish. Now, if price should now come down and take out this bottom, once price take out the last bottom, so you now know that the it gives you an intel, right? It gives you an intel that okay, you might be expecting a bearish scenario. So that means if you've been buying, the moment this low is broken, right? The moment price breaks this low, if you've been buying, then you should not be anticipatory of incoming sales, right? So most of the time, what price we do after taking out this low, depending, right? Price might just swing back. Now, if there are imbalance, most of the time, this movement that leads to this break is going to create an imbalance, right? So price you need to retrace back to feed those imbalance in price delivery, or what some persons call the FVG, or what some persons call the IPA, right? After filling it, price will drop. So that is if price has the intention to go down, right? So this for the bullish profile and when it's now goes broken, right? Now the same thing happens for the bearish, right? As long as these stops are considered the profiles is not broken, you continue to look for sell opportunity, right? Until if price takes out this last stop, right? So the moment that happens, that means it builds your anticipatory skills, right? Then you now be now looking for buy setup, right? So this is just a quick overview of market structure. This is just a quick overview of market structure. So if you still don't understand market structure, I think you can go through the videos we did on market structure, right? So if you go through the video we did on market structure, you'll be able to understand. I actually took my time to explain structure very well. So this is market commentary. I don't supposed to be teaching here just to show you how things happened. All right, so coming to good. So I like to build my directional bias. I like to build my directional bias starting from either the daily or the weekly or the monthly, right? So at the beginning of the week, I like to start with the weekly, right? Now this is the current week that just happened, right? Now this is the previous week. Now in building our bias, there are two ways you can actually build your bias, which is the one of the ways is the tap and reject, right? Which I've explained. The tap and reject. That is when price taps a key level and got rejected, right? So this is one of the ways you can be your bias. Then the second way you can be your bias is by looking at candle sweep, right? Let's say, for instance, what we have here. This is the price action of previous week, right? Now, this is the week we are currently, right? So this week we are currently now. Before this candle happened, this is what we have. So you see that this last week candle, it took out the high of the previous week, right? The moment price took out this high, right? So you can either build liquidity using the tap and reject or using the candle candle sweep, right? The moment price take out this high. Sorry, let me. Now, how you know that this is a sweep is because it took it and close. It take out the high of the previous week and close below it, right? So now by everything being equal, right? So that means this is where the target should be, right? So since it has taken out the previous week high. So your expectation is that in the coming week, your overall target should be to take out the previous week low, right? Now this is the what you are having on the weekly, right? But now l- let's go down to daily just make things more easier. The weekly just to give us a general overview, right? So since it's a new week, it's always good to start from the week and know what the previous week has done. Now, if coming down to the daily, right, you can as well from here. Let's see if I mark this and come down to daily. Let's see if there is a break of structure, right? If there is a break of structure. So daily didn't give us a break of structure yet or a breakout yet. So I like to now build my bias using the price action on the daily. Now, first off, this is okay. Let me start with Friday. This is Friday because you want to trade Monday. For you to trade Monday, you are going to use price action or what happened on Friday to be able to know your direction or bias for Monday. Now, this is Friday, so let me just put this tool on Friday. Now, looking at Friday, okay, let me just shift this so that I can be able to look at the tap and reject. So looking at Friday now, for us to be able to build our bias, we have what we call the tap and reject through. That is when price taps at the key level. Now, this is a key level. This is open and close key level that rejected price, right? So the moment price the moment this Friday candle take out Thursday low, right, and got rejected. So since it has taken out Thursday low, by all things being equal, your expectation is that it's going to the target should be Thursday high, right? So because price always move from one liquidity point to another. So since this Thursday low serve as a liquidity point and Friday took it out, then your expectation on Monday is that price should go and take out Thursday high right now. So price tap on this key level, which is open and close key level, and got rejected upwards and close above it. So that means this will give you an intel to build your anticipatory skills for buys. But now you don't just jump in and buy, right? You want to wait for confirmation, right? So, like I've explained earlier, right? So, once you have that tap and reject, you go down to H4, right? So, if your storyline is starting from the daily, once you have the tap and reject, go down to H4. So, in H4, you are looking for any of these. So, is either price gives you a sweep of liquidity and a break of structure, or price gives you a breakout. So when you see any of these, right, this is for the bearish scenario, but the same thing happens for the bullish scenario when you just need to swap it. So when you see any of these, right, on H4, that means H4 now confirms daily. So when we say that H4 confirms daily, simply means that H4 is in alignment with the H4 is in alignment with the price action on the daily. So and when two higher time frame aligns, that means you are trading in line with the trend, right? Or we are trading in line with the higher time frame. So now coming down to so I want to mark the lowest point of this Friday. All right, so this is the lowest point of this Friday. I want to mark it and go to H4. Believe you can see my screen. All right, so go to H4. So in H4, we want to check if there is sorry, before we go to H4, let me still mark this. All right, so let me just put these two here so that we know Friday. This is Friday, right? So because you want to use Friday price action to trade Monday. So this is Friday, right? And this is the low. Now on H4, we want to for us to confirm buy, right? For us to have a confirmation for buys, right? We need to see a breakout, which is something like this, right? Price breakouts a high, right? Let's say something like this. we need to see a breakout of a previous high because price has been okay. Let me do this thing well. Price has been coming down like this, right? This just price has just been coming down like this. So for us to now have a confirmation to start buying, we need to see a breakout on the H4, right? We need to see H4 breakout. So once we see H4 breakout, that means H4 has confirmed daily, right? This is exactly the same thing I explained while at the beginning the market structure. So that is why I explained market structure for the purpose of this, because this is structure, liquidity, and key level. So coming here, if we go to the line chart, if you go to the line chart, because this Friday, the whole of this is Friday. So this is where this particular candle you are seeing here, this one is okay, let me just this particular candle is a Sunday candle that opened the market, right? So these other candles are Friday. So if you look at Friday, you are going to see that there was no breakout to the upside, right? There was no breakout to the upside. So this high, this top on the H4 was there was no breakout. So price did not break through it. Now since price did not break through it, so that means the daily reject daily that is and closure on the day on the daily time frame that is giving me clue to buy, I will not be buying since there was no H4 breakout, right? Since there was no H4 breakout, I will not be buying. Rather, I will still focus on the current trend because looking at what price has done in the previous week, it's been more of a bearish move. So price it has been more of sales. So I will continue to sell until there is a change in trend, right? Until there is a breakout of the top, just like I told you, I showed us at the beginning. So what constitutes the bearish profile at the top? So if there is no breakout of the top, I will still continue to look for sales, right? So Monday, since there was no breakout, since there was no H4 breakouts, so that means personally, I will disregard this daily reject daily and still focus on sales, right? So this is Friday. Then if we should put this back, you are going to see, yeah, you cannot be able to, right? This is Friday. If we go back to maybe if you go down to even on the H4, you can be able to pick entries, can be able to pick sell entry, you'll be able to see some sell entries that happened, right? So depending on the time frame that you trade, if you are the type that trade lower time frame like 15 minutes or whatever, you can go to any time frame of your choice. Just be looking for your entry model, right? So because now you've already know market direction, right? You just be looking for your entry model. So let's say on H4, you can even pick entry from H4, right? But just to make things easier, I will go to H1. So on H1, what should I be looking for? Now, we trade LCK, structure, liquidity, and key level. So that means I'll be looking for liquidity, right? Now, once I've seen my liquidity, I will now look for key level close to it. Since by structure, I already know that price is bearish, right? By structure, I already know that price is bearish. So using my directional bias or the story line, I already know that price is bearish. So that means I'll be looking for sales. Now, but I won't just jump in and start selling. I have to look at a particular point in price. So for me to be able to get that particular point in price, what I look at for first is liquidity, right? Now, when I've now gotten liquidity, I'll now check what is the key level closest to it. Now this is Asian high from Thursday, right? This is Asian high, right? The high of Thursday, and this is an Asian high. Now this Asian high is my liquidity. So like I've told us, there are various forms of liquidity, right? Of which the Asian high and the Asian lows are one of the various forms of liquidity. So now, this Asian high of Thursday is serving as my liquidity. So we also have liquidities here, right? These are okay. So I'll stay with this Asian high. Now, what is the key level closest to it? Now, we have the open and close key level here, and we also have the A-shaped key level here. So you can decide to play the A-shaped key level or play the open and close. But personally, I like to play the key level closest to the liquidity. So I'll be playing this open and close, right? So you see what price did, right? So when market opened on Sunday, price just hit that key level and got rejected, right? Price hit the key level and got rejected. So that means maybe if you have your entry here, but now there is likelihood that this first entry you are going to miss it because this is actually the thing that happened when price open. So there is likelihood that you are going to miss this entry because of maybe spread and some other things, right? So if you miss this particular entry, now since this key level sponsored sales and coming to coming to Monday, this is an Asian high as well. Now, this Asian high is another liquidity point. Now, since you always want to look out for key level closest to liquidity for your entry, so since I already know that this is a key level and this key level initially has sponsored a sale, so I will also be expecting price to come back to it because since I have a Shanghai here, so this key level still become stronger. Now, this is like for people that trade other block, they will like maybe they tell you that once another block has been used once price has touched another block, another block has been mitigated, that you cannot use it again. But that is not so when it comes to key level because key level represents exact pricing, right? Other block is more like a zone in price, but key level represents exact pricing. So the moment price uses a key level over and over again, the more strong that key level becomes, right? So this key level that has sponsored sales, I will give premium attention to it. Now, this is exactly similar thing that happened on the trade I took on German index, right? Let me just quickly show us. We are going to just notice similar thing. Now, this is a you see that this is a key level that sponsor sell, price break through it and still come back to it. So whenever a price has touched a key level multiple times, that key level you should give it premium attention. So now, during the now price now came back to this key level, and that was in this 1700, that's 5 p.m. Almost at the close of almost at the close of New York. So New York is like have like 5 hours ahead before they close. So price came back to it. So if you miss this first entry, this is the another entry you should have gotten in, right? Using the LCLK. Then maybe depending on your risk to reward ratio, you can do 1:3, 1:whatever, 1:5, or just try to take out the next low because remember this is the Friday low. So price always move from one liquidity point to another. So this Friday low is serving as an external liquidity point. So you can just decide to take price and take out this Friday this Friday low, right? So it depends on what works for you, right? So, but this is how you would have catch the trade or be able to pick entry on Monday. Now, if you go down to 30 minutes or 15 minutes, the same thing, right? The same thing, depending on the time frame you love picking your entries on, but still the same thing, right? If you understand the concept of liquidity pools and stop runs, so more like these regions are liquidity pools and but I just want to limit this to LCLK. structure liquidity and key level. So even if you go to 15 minutes, you'll be able to also see entries to at least you see entries to peak on Monday, right? So that's about the move on Monday using Friday price action. Now we are done with Monday. Now let's now look at what we should have done on Tuesday, or how we be able to pick trades on Tuesday using Monday price action, because since I'm building my storyline from the daily, like I always use the previous day to make decision for the current day, right? So this is Friday, this is Monday. So I want to now use Monday price action, right, to make the trading decision for Tuesday. So is assume that okay, you've not seen all these things, right? You've not seen all these things. So now this is Monday. So I will pick my two vertical line just to mark it. But before I mark it, I will identify my Monday highs, right? So that I'll be able to use it to know the sweep and the rest. So this is my Monday high. This is my Monday high. Why this is the Monday low? This is the Monday low. Now, looking at this Monday high, we have a key level here. This is an A-shaped key level, right? So the daily rejected daily, right? So this is an A-shaped key level. Price touched this daily key level, right? And got rejected. Not only that, price got rejected, it got rejected and closed below it. Now, before this key level rejected price, right? Before this key level rejected price, it did something that is very, very important. It took out, it took out Friday's high and also Thursday's high, right? So it took out Friday high and also Thursday high. Now, since price has taken out Friday high, so that means our expectation for the coming day, which is Tuesday, is that price should, if we are selling, at least the minimum place we are looking at price, or the, let's say, the overall place we are looking at price coming is the Friday low, because price always move from one liquidity point to another, right? So this is the Friday low. So now let's go to now, but now daily has rejected daily, right? So daily has this is the A-shaped key level. So daily has rejected daily. So that is this price action on Monday has been rejected from this A-shaped key level and closed below it. But now giving us an intel to sell. But now we don't just jump in and sell. Before we sell, we want to be able to see if on the if on the H4 we can be able to get any of this. So this has happened. Tap and reject has happened. So we want to see if we can get any of this. So if we're able to see any of this, it now gives us confirmation to start selling. So we go to, or we put this here, then go down to H4. Right. So on the H4, what do we have on the H4? So on the H4, this is on the H4, I want to be able to see a break of the bottom, right? So if you check, sorry, right? So this is Monday, the whole of this is Monday, right? Now this Monday. So if you look at the H4, we are going to see that there was a breakout, right? So there was a sweep and breakout, right? There was a sweep and breakout. So let me maybe let me just do this. You have this and a breaker happened. Now let me just bring this out. Let me remove this guy. Right. Yeah. Now if you look at this thing now, if you look at what we have here and go back to what we have in this template, you are going to see that price, we were able to get this. Price gave us this. Price gave us this. So So that means Monday gave us a sweep and breakout, which give us a full intel that, oh boy, just be looking for sales on Tuesday. So we did so on Tuesday I was just interested on the sales, right? Because price action on Monday has been rejected from key level, and not only that it was rejected from key level, but it also broke out. Now look at the candle that broke out. Look at the candle that caused the breakout. You are going to see the impulsive nature of the candle. So that is another intel that you might pay attention to, right? The impulsive nature of the candle that caused the breakout. Let me use this. Right, you might also pay attention to the impulsive nature of the candle that caused the breakout, right? So this is the candle that caused the breakout. This candle was on Monday, and this is at the close of New York, right? That is when this happened. At the close of New York and the beginning of Asia, that is when this happened. So now, so with this intel, I'll just be looking for only sales on Tuesday. So that means if I go down to maybe to go down to H1 to pick my entry, I'll just be looking for sales. I'm not interested on anything buy. So that doesn't mean that there won't be buy moves. There'll be buy move, but I like to stick with my directional bias once I've established my directional bias. So I like to stick with it. So so this is where the breaker happened. Sorry, sorry. This is the where the breaker happened, right? Now this is a what we call uh SBR, right? So now this level is supposed to act at you remember, you know that this is a V-shaped key level, right? And this V-shaped key level, we're supposed to use it for buys, right? You see that initially it sponsored the buy, but now price has broken through it. So that means it now turns to a resistance level. So you're expecting that price will come back to it and now use it for sale. And that was exactly what price did. So the moment when markets open on Tuesday, so this key level was where the sale started. So depending on your this thing, right, you can do 1:3, 1:5 or whatever, right? So this if you are picking your entry from the if you are picking your entry from the daily, right? So you can as well go down to M30 or 15 minutes to pick your entry. Still the same thing, right? So that key level is still valid. So this is support broken, turn to resistance, right? Then you can as well go down to 15 minutes, still the same thing. So you are just looking for maybe if you go down to 15 minutes, it will now make more sense to you because on 15 minutes you are not able to see the inducement liquidity very clearly, right? Now, this is an inducement liquidity. Why is it an inducement? Because this level is like what triggers this move here. Let me remove this guy. So this move here is like what triggered the early sellers to start selling, right? So this is an inducement. So it's a kind of trick them. They started selling. Now, for had it been that this leg dropped and take out this low, then it's no longer an inducement. But since it just dropped halfway and start returning back, so that means you now have a liquidity, right? So remember, we're always looking for liquidity close to key level, right? We are looking for liquidity close to key level. So you can decide to still use this breaker level as your this thing, or you can maybe if you are not here, you can refine it to because we have another key level here, right? So we have another key level here. So you see that had it been you want to play this extreme, it would have been a mid-century. So you always want to use the key level closest to the liquidity. So we have open and close key level here, and we also have a V-shaped key level here. So maybe if you go down, if you change this to line chart, it's going to make more sense. You're going to see that you have a V-shaped key level here. Now here I'm using this. I'm using this, if I remove this, right? So I'm using this Asian range Nikkei, so by Nikkei. So I just use this indicator to be able to see my Asian map. So that is the Asian high and low. So just makes life easier for me to be able to spot them, since I know that the Asian high and low are liquidity points. So that means I'm always careful with them, maybe for picking my entry. Now, had it been that I did not see this inducement liquidity, then I would have been waiting for maybe for price to come and take out this Asian high and low. But since I have this inducement liquidity and this Asian high is more like on the zone where we have that breakout, that is the support broken turn resistance, then playing here is playing from here is a good thing to do. So just from here you pick your entry on Tuesday. Just look for sales, right? Look for sales. So you work with your higher time frame direction, right? So look for sales. So that doesn't mean that there won't be buys, but if you are anybody buying, it's just a counter trend. So if you are buying, then you now know what you are doing. Maybe if you are buying, maybe target less RR. But personally, once I've established my directional bias, I like to stick with the bias until there is now a change in the trend, like I explained in at the beginning on using market structure. So if market structure hasn't changed, I'm not interested in changing my bias, right? So the structure has to change. So this is how you would have made some or cast some buys on Tuesday. So also you can as well pick continuations. So maybe if you miss this first move, you can as well pick, maybe if you're on the 15 minutes or even 5 minutes, you can pick continuation. So here we have another open and close key level, right? Right. You see that price touched it and dropped. So all of these are moves on Tuesday. So on Tuesday, at least you should be. I think I had only one entry on Tuesday. But if you're on the charts active, yeah, like you could have had multiple entries, right? So this should have given you another entry. This should have given you another entry because this is the liquidity and the rest. So that is that about my trade entry on Tuesday. Now let's now go to Wednesday. Let's go to Wednesday and see what happens. So now, for us now to trade Wednesday, right, you are going to use the price action of Tuesday to trade Wednesday, right? You are going to use price action of Tuesday to trade Wednesday. So this Tuesday. Now, on Tuesday, price did something funny that is very tricky, right? So after they drop, so this is a key level. Now, price touch this open and close key level and close above it. And also price swept liquidity, swept an old low and close above it, right? So the moment price close above it, by our approach, we are anticipatory of buys, right? Since price has closed above it. But now you don't just jump in and buy, right? You will go down to H4 and check if the structure has broken, right? If there is a break of structure. So price has tapped and price has rejected. But you need confirmation. So if you go down to H4, if there's no confirmation, you just neglect it and continue with the current trend. The trend currently is bearish, right? So I'll just mark these levels and go to H4. Let me mark the low. Then I'll go to H4. Go down to H4. So we want to use Tuesday price action to trade Wednesday. Right. So this Tuesday now, this Tuesday. So if you look at Tuesday, you are going to see that there is no there is no break of structure on Tuesday. Even on Wednesday, sef, remember this is where the breakout. Right? This is where the breakout is supposed to happen. But now, even though if you are looking at this, right, this breakout you are seeing here happened on Thursday. So this Thursday. So before this Thursday, we want to trade Wednesday, so it assumes that all these things of all these moves of Thursday are not there yet, right? So even on the Wednesday, you might just have something like this. So all this area that I bought, they are not there. Now this is not a break of okay. If you change you are going to see that there was no break of this structure. The structure is still intact. Now you see that price touch this our A-shaped key level, but price did not break it. Now, for us to have a break of structure, right, price has to close above that key level with body. So you see that it's just the wicks that are touching it, right? So now, this is still another intel. Let's say that this is still another intel that can also help you to. So with Dix, looking at Dix, I know that since there was no breakout, right? Since there was no breakout to the upside for us to buy. So I will neglect that tap and reject on the daily. So that means H4 hasn't confirmed the daily. So that means H4 is not in alignment with the daily. Then I will continue with my bearish bias, right? Now I can from H4 here now because of some intel I'm having on H4. I can from H4 now and build bias again. Now this H4 tap and reject, right? So if I go down to H1, if H1 gives me a breakout, then I will now be looking for sales. So this is that H4 tap and reject, right? So on H1, if it gives me a breakout, I will now be looking for sales. So you see that if you go down to if you go down to if you go down to 15 minutes, we are going to have minor sales. You are going to see minor sales that happened on Thursday, on Wednesday, I mean. So Wednesday, I'll still look for sale, but I didn't take any trade on this Wednesday because it wasn't just clear. So I don't want to me once the DC is not clear, I stay out. I don't like to force trades, right? So but if you are the type that force trade, if you come down to Wednesday, definitely you are going to see an entry on the 15 minutes to sell, right? But personally, I stayed out of. I think on Wednesday I was trading GJ, right? So you should be able to pick an entry here to continue the sale. But Wednesday is not clear for me, so I just left it and wait for Thursday. Then now let's look at how we now be able to use Wednesday price action to trade Thursday. Alright, so I think this video is becoming long, but I need to round up and do other things before I go to bed. Now this is Thursday, right? This is Thursday, right? So now for us to trade Thursday, we are going to use Wednesday price action. Now Wednesday price action, let's look at and see if it rejected from any place, right? Yes. Now this is an A-shaped key level, right? So that price tapped on it and rejected and closed above, right? Price tapped on it, rejected and closed above. So that means, remember, I want to use Wednesday to trade Thursday. So now, for us so price tap on it and reject above, so giving us an intel to buy. But we don't just buy, right? You go down to H4 to look for confirmation. I will, so this is the Wednesday low, right? So I'll go down to H4 to see if it give us that breakout, right? So this Wednesday low, see that Wednesday did not give us any breakouts. There was no breakout because this is the high we are looking to break. This is the high we are looking to break. So there was no breakout. All these things are not breakout. For us to have a breakout, price has to close price has to close above this with body, right? So now the breakout finally happened on The breakout happened on Thursday, right? So there was no breakout. So since there was no breakout, so that means the tap and reject that is suggesting you to buy, you just neglect it and let it be. Continue with the trend, continue with the bearish trend, and continue to look for sell opportunities, right? Then on Thursday, I think I had three on threes on Thursday because I already know since this intel that Wednesday was giving me didn't give me confirmation. So I was just looking for sales. So I had three entries on Thursday. Let me go to the daily, I'm sure. But out of those three entries on Thursday, two hit SL. So it was the last one that not delivered and even helped me to recover the 2 hour I lost. So my first entry was somewhere around here. So now since the Intel on Wednesday, we aren't able to see anything to buy. So it's just the same thing. Look for liquidity. So as of Thursday, this was a liquidity point I was looking at. Right. Okay, let me go to 15 because I use 15 minutes. I use 15 minutes. I will show you my entry. So this was the area I was looking at my liquidity, right? Then then I was using this as my key level for entry, right? So this was my key level for the first entry I picked, right? So this first entry went okay. Let me just check. Okay, I think Thursday, yeah. So I have two losses on Thursday before the final one that went in profit that gave me about 7 hours. Right, so I was looking to pick the first entry here using this high as my inducement, as my liquidity. Then but price it after I now had SL, right? After I now had SL, then at the end of Asian, I was not able to see this Asian high, right? I was not able to see this Asian high. So I think this other move, which was on the day, on the H1 I used. So on the H1 I used. So I'm trying to round up this. So the second entry was on the H1, right? So the first entry was on 15 minutes. Right, remember I'm trading Thursday using the interest from Wednesday. So Wednesday didn't give us a breakout. So that means we continue with the current flow of the market, which is bearish. So now this is the Asian high, right? Which is a liquidity point in the market. So my first entry here hit LCL. So when I now saw that okay, price has given us an Asian high. So I wanted to play. I always like to play the key level closest to the liquidity, right? So that is why my second entry was here. But now my stop loss was tight. So I was using 50 pips. Yeah. I was using 50 pips SL. So that is the mistake I made on the second entry that made it to hit SL. I was just trying to use an arbitrary essay. But what I supposed to have done, because it's good when you have a loss, it's always good to know the reason why that loss and what you should have done, right? What I supposed to have done, right? Or the right thing I should have done is to my SL shouldn't just be arbitrarily, right? You should always cover the point of invalidation. So this is supposed to be the point of invalidation, right? Because you know that this is a swing. This is a swing, right? So this is a price swing. So the top of the price swing, right? Supposed to be the highest point of invalidation. So that is the mistake I made on Thursday for the second entry, right? So the second entry, I think I have it here. So the second entry hit SL as well. So it's now the third entry that went well. So after that, I just know that why I had that is because I was using an arbitrarily stop loss based on my instinct without paying attention to cover the highest point of invalidation. Right, so this is the second entry I had that hit Excel on Thursday, right? On Thursday. Then since I already know that price is bearish, right? Since I already know that price is bearish, and as price dropped, right? Price dropped and it was coming back. I already know that this is a key level that price is going to react again. So I picked another entry from here. So that is the third entry that actually gave me 7 RR, right? Gave me 7 RR that covered the losses I had here, right? So this we are now picked the second, the third entry, I mean, that I now, I think no, this is the key level I was using. I was using this key level. Then I was using this high as my liquidity, right? So if you go down to 15 minutes, you are going to see it more clearly. You are going to see that area more clearly, right? So this the high I was using as my liquidity. So that is where my entry is. Then I was targeting price. I think I did 7 RR for this particular trade. So this 7 RR. Right. So now the now let's now look at how we now use Thursday. So we've been able to use Wednesday to trade to trade Thursday. So now let's look at how we use Thursday to trade Friday. Right. Now looking at Thursday, we will now want to trade Friday, right? Using Thursday price action, right? By SLK. Now on Thursday, price touched this key level and got rejected from it. So this is an open close key level. Now before price touched the open close key level, price did something very important. It swept Wednesday high and also swept Wednesday low. Now this price action on Thursday is somehow tricky, right? Because you have rejection and close above, and you also have rejection and close from a key level below, right? So this thing is very tricky, but the way I like to go around it whenever it's like this, I'll stick with the direction that gives me a breakout, right? That the direction that gives me confirmation. So whichever direction give me the confirmation, that is the bias I will take. So let's look at what we have here. I'll go to H4 and see what we have here on Thursday. So which direction gave us the confirmation? So for Thursday, this is Thursday. So do we have a confirmation to do we have a confirmation to buy? There was no breakout to the upside. So rather the breakout was to the downside. And this is where the breakout. Okay, let me zoom in. Let me just remove this. By now you already know where Thursday is. So let me remove this. This is where the breakout happened. Right? This is where the breakout happened. That now give us the intel that okay, it's time to continue selling. And also, if you look at if you look at the impulsive nature of the candle that caused the breakout, right? So it already gives you an intel that price is bearish. So that means on Friday I should just be looking for sales. If there's anything buy, I'm not interested because the the market profile is bearish until there is a breakout to the upside that now changes the profile, right? I will stick with the trend. So that is how I was able No, my coming from Thursday, right? The earlier position I had on Thursday was still running. Then Friday now open and meet it. So since my Thursday position, I was targeting 7 hour and it was still running, right? It hasn't hit 7 hours. So when I now saw what price did at the close of Thursday, I was now eager to still hold my trade, right? I hold my trade. I did 7 hours, so for I hold my trades because this is where Friday now opened, right? So Friday opened, is this Thursday? Sorry, this Thursday. The third entry I had triggered on Thursday, but Friday finished the work. I triggered on Thursday, but Friday finish. Friday delivered the full TP, right? So we didn't tell on Thursday. I already know that Friday itself. So it just keep holding my sales, right? Even though this after the dation, they kind of seems to be a buy, but I wasn't interested in the buy. Now, something very, very important happened on like something very, very important you might pay attention to, right? Now, when I now saw the price action on Thursday, right? When I now saw the price action on Thursday, so these were my targets, right? Because this an A-shaped key level, right? Because oh, price move from storyline to storyline, right? So this is a V-shaped key level, and this V-shaped key level it has liquidity before it, so which makes it a viable key level. You should be expecting price to react, right? And this is a liquidity, and this liquidity hasn't been taken. So I was not expecting, okay, the move from this Thursday should at least come to this area. So that was why I was targeting this area. So when price breaks it, right, if you're on the lower time frame like 15 minutes, you can be able to even pick a re-entry at this breakout level, right? So that is more like a support now turned to a resistance. So the moment price break it, you can maybe if you're on 15 minutes, you can as well be able to pick entry. But I just had one entry, right? That delivers 7 hour and I'm okay. So this is how I was able to use LCOK with understanding of market structure to trade good during the week, right? Now, what are my expectations for the coming week, starting with Monday, right? So first off, I'll start my study or analysis from the weekly, right? Now, looking at what price has done, right? So on the weekly, there is nothing like where I'm seeing rejection. So on the weekly, it's more like, I mean, this but there was a rejection here, but it's not rejecting from any key level, so I will not take it serious. So, but looking at what weekly has done, weekly is bearish. So, and if you go down to daily and we check, daily has given us a breakout, right? So there is a recent breakout. So you always want to pay attention on the recent breakouts. So there is a recent breakout on the daily. So with this recent breakout on the daily, right? So that means the daily time frame is in alignment with the weekly, right? So the daily and the weekly are saying, okay, we are bearish, right? So but now I will now scale down to daily. So now, this is the price action on Friday. So I'll now use this price action to make trading decision on Monday. Now, price got rejected from, okay, let me see which key level. So there is no key level where this guy is even reacting from, right? If you see that, it's supposed to be an A-shaped key level, but price did not touch it. So it's more like this guy is hanging. So I will, on Monday, I will still be looking for sales, I'll still be looking for sales. I'm not interested in the buys. The only thing that make me to look for buys is maybe on the H4 price has given me something like this. So if the top, right, as long as price has not taken out this top, right, maybe a previous high on the H4, I'm not interested on anything. But that doesn't mean that there won't be buy in the market, though, right? There will be buy, but personally, based on how I play or the rules I follow, right? For me to be able to start looking for buy, right, there has to be a breakout that will confirm my tap and reject on the daily. So without that, I will still be bearish. I will still be looking for buys on Monday. Then after Monday price action, then I'll now on the price action on Monday, I'll now be able to know what to look at for on Tuesday. But for now, looking at how Friday candle closed, I'll be looking for opportunities to sell. Right? That doesn't mean that there won't be buyer because price definitely we buy to price currently at a discount. Definitely to buy to premium now to now give room for sales. So, but that buying to premium, I'm not interested in taking it because that is just a counter, right? So what are my expectations? Where am I looking at to pick a sell on Monday? Now this is H4 key level. Now if you go back to what happened previously, the moment we broke a level like this earlier, we use it to sell, right? So the moment we had this, we use it to sell. So if you go down to H1, you see that we use this level to sell. Or okay, I think this is it. Once we have it, moment it break out, we use it to sell. Now the same thing is what I'm having on H4, right? Moment is what the same thing is what I'm having on H4, and this is my liquidity. It's making more sense, right? So why we just price not touch that level? So price has already built a liquidity for me, right? So that means on Monday, once price is retracing to that area, I'll be more alert, right? I just set my alert. So that means for people that want to counter trend, right? So you might just be picking your counter trend coming to meet us here, right? So, but this is where me I'm looking to pick myself, right? But let's see what happens. So, we analyze the market and allow the market to play. So you can you can't control the outcome of your trade, any trade you have, because it's all about probability. So, but you can only control your risk. So that means no matter how beautiful or how excellent the setup is, your risk management is very, very important. So this is where me personally I'll be looking to pick a sell, right? To pick a sell. So that is my expectation on Monday, what I'm looking at for Monday, right? So that is that on the commentary on gold. I think this video is becoming longer. I will cut it and quickly do a commentary on German tech before I finish other things I have to do and go to bed. Thank you.